Welcome to the deep dive. Today, we're digging into a specific stock trading strategy. This one from Mansi Suryawanshi.
That's right.
We want to kind of unpack the core ideas behind her approach, see how these principles might apply across different time frames.
Yeah, and at its core, Suryawanshi's strategy is really about um, identifying stocks that are clearly moving up.
Okay.
She starts visually.
Mm-hmm.
Like on a line chart, the end of that line should be pointing upward. Simple first step.
Right. Just a basic upward trend.
But that's just the start, that initial filter. It
Yeah.
applies whether you're thinking short term or holding for ages.
Exactly. And it's not just a quick look, is it? She has these specific layered conditions for actually for going long on a stock.
Exactly.
First, whatever time frame you're watching, you need that upward move confirmed visually, maybe a green tick, she mentions. And critically, on the daily chart, volume has to spike.
Uh-huh. Volume's important.
Yeah, like at least double its usual 20-day average.
Yeah.
Shows real conviction, right?
Exactly. That volume surge, it signals real interest. Then she uses RSI, the Relative Strength Index, to gauge momentum strength.
Right. RSI measures how strong the recent price moves have been.
Correct. So for a long-term hold, say over a year, the monthly RSI needs to be above 60. That's the foundation.
Okay, monthly RSI over 60 for long term. What about medium term? Say 9 months to a year.
Well, you still need that monthly RSI over 60, but also the weekly RSI has to be above 60. It's like adding another layer of agreement.
More confirmation. Makes sense.
Precisely. Then for positional trades, maybe 1 to 9 months, you add another check.
Mm.
The daily RSI also needs to be over 60.
Monthly, weekly, and daily RSI over 60. Okay.
And for even shorter trades, like 1 to 3 months, you guessed it, you look lower still. The 4-hour or maybe even the 2-hour RSI needs to be above 62.
So the shorter the hold, the more immediate that momentum needs to look across faster time frames.
You got it.
Now, what about the flip side? Getting out. When does she say the trend might be over?
Yeah, good question. The exit rules are kind of symmetrical to the entry ones, and it's just neat.
How so?
So for that long-term trade, you'd consider selling if the monthly RSI closes below 40, or alternatively, if the stock price drops, 1 APR below the 200-day moving average.
ATR being average true range, like its typical wiggle room.
Exactly. It gives you a volatility-adjusted level, and the pattern continues down the time frame.
So let me guess. Medium term is weekly RSI below 40 or 1 ATR below the 50-day moving average.
Spot on. And for positional and those 1-3-month trades, it's the daily RSI below 40 or 1 ATR below the much faster 20-day moving average.
It's all about consistent triggers then, protecting your capital.
Absolutely. Which leads right into risk management. She's very clear on limiting losses.
How much?
It scales down. Max loss of 7% for long term, 5% for medium, 3% for positional, and just 2% for those shortest 1-3-month trades.
So you have to adjust your position size based on where that stop loss level sits relative to your entry?
Precisely. Manage that risk exposure per trade.
Okay, she also talks about a more active approach using something called an alert candle.
Ah, yes. That comes in when your longer time frames, monthly, weekly, daily RSI, are all looking good, all above 60.
So the big picture is bullish.
Right. Then you might drop down to a lower time frame, say the 4-hour chart, and you watch for the first candle where the RSI on that time frame crosses above 60. That's your alert candle.
An alert for a potential entry point.
Kind of like a trigger signal within the established trend, yeah. But you don't buy on that candle.
Oh, when then?
The rule is to place a buy order just above the high of the candle after the alert candle.
Okay, confirmation needed. And the stop loss.
That goes at the low of the alert candle itself. And for these kinds of trades, the risk is usually kept even tighter, often like 1% of your capital per trade.
Wow, tight control.
Very. And she even suggests a way to get out at break even if it moves up a bit, then pulls back. Plus, for trailing your stop loss as it hopefully goes profitable, she uses parabolic SAR, PSIR.
Okay, PSR for trailing. On which time frame?
Always on a time frame lower than your entry time frame. So like 4-hour entry uses 2-hour PSR, 2-hour entry uses 1-hour PSR, and so on down the line.
Got it. Keeps the trail tighter. So how do you even find stocks meeting these initial broader conditions? That seems like a lot to check.
She mentions using a stock screener, specifically on www.chartinc.com, and gives the filter criteria.
What kind of filters?
Things like monthly RSI above 60, weekly RSI above 60, maybe the daily RSI was above 58 yesterday. The latest price is above yesterday's high.
So trend and momentum checks.
Exactly. Plus, volume filters like latest volume over 500,000 shares and significantly higher than its 20-day average volume. like 5 times higher in one filter she provides.
So the screener basically flags stocks already showing that multi-time frame strength and liquidity.
Yeah, it narrows the field considerably. She gives Jai Balaji Industries as an example back in late 2022, showing all those RSIs lining up.
And that example leads into the final step, right? The sniper entry.
Precisely. After all that screening, all that confirmation, the final step is dropping to the 15-minute chart.
15 minutes, wow.
Yeah, waiting for the 15-minute RSI to cross above 60. That becomes the final alert candle. Buy above its high, stop loss below its low. Very precise entry.
So it's like zooming in from the satellite view down to street level for the final move.
That's a good way to put it. Capitalizing on immediate momentum within that bigger confirmed uptrend.
Okay, so wrapping this up. The core of Suryawanshi's strategy seems to be identifying uptrends using RSI and volume, but critically, across multiple time frames.
Yes, seeking that alignment.
And then having very specific entry triggers, equally specific exit rules, and a huge emphasis on risk management tied to the holding period.
Couldn't summarize it better. It's methodical.
So for our listeners, the key takeaway might be less about adopting this exact system, perhaps, but more about the underlying principles.
I think so. How could understanding this idea of multi-timeframe confirmation influence how you look at a potential investment? Or how could implementing strict, predefined risk controls, like the percentage loss limits or the ATR stops, change your own approach?
Definitely food for thought. Even if the specific indicators aren't yours, the concepts of confirmation and control are powerful.
Absolutely. It's about building a robust process.
Interesting stuff. And I believe the author has a book collection of stock market wisdom for those wanting more detail. Thanks for breaking this down.